If you know how the world financial system works, you know the game that you're playing. And if you don't know the game and the rules that we're playing by, you're going to get slaughtered. You are going to get slaughtered. Ever since the Federal Reserve was born, we have been living under a lie. In order for us to maintain the levels we've got and to maintain the prosperity, Obama has to be twice as far in debt when he leaves office than when he came in, or the whole thing is starting to collapse. The Federal Reserve, they're buying bonds directly from the Treasury. This is quantitative easing, they're calling it. And that means there's an emergency going on. I could see that there wasn't anything in history, as far as finances go, that was as much of a sure thing as gold and silver accounting for the expansion of the fiat currency supply. There's absolutely no chance in hell that this won't happen. Right now it takes about $15,000 to $20,000 an ounce gold. I believe that there's going to be deflation first, and then all of the world's central banks will start printing like crazy to get us out of that deflation, and Ben Bernanke will be leading the charge. And you can't have a debt that is 10 times the size of your economy. It's not possible. Everything comes to a screeching halt first. I got to show you that the world's stock markets and real estate bubbles have to continue crashing, because all it is the market trying to seek fair value. It's trying to seek equilibrium. This is what the markets do. It is their job. Basically, you know, our entire currency system is imaginary. It doesn't really exist. It's just that we're all dreaming the same dream. If anybody chooses to wake up, it's over with. Thank you very much. I'm Mike Maloney, author of the best-selling book on precious metals investing, Guide to Investing in Gold and Silver. It's part of the Rich Dad series that Robert Kiyosaki started. The original book, Robert Kiyosaki says, write a book. No other instructions, write a book. And so I started writing this book, 2.5 years of research and writing, probably 30 hours a week, every week for 2.5 years. It's a very well-researched book. The one thing I really worry about is perpetuating misinformation. I want to be accurate, and then I try and boil it down and make it real simple. I read all these books by economists like Milton Friedman, Murray Rothbard, Ben Bernanke. If you get a chance to read some Ben Bernanke, don't. He's a horrible author, just horrible. They're all trying to write over each other's heads and impress each other. And by doing so, they make economics sound so complex that everybody thinks, well, I can't understand economics. It's really simple. Economics is very simple if you boil it down to its essence. And it's not that difficult to understand, and that's what I try to do in my book. For the people that have not read my book, about 75% of it is not about investing in gold and silver. It's some history of money, and then how the global economy works and what could potentially happen. You know, so it's where we came from, where we are today, and what could potentially happen. By the way, I really couldn't care less about gold and silver. I don't want gold and silver. It's just in its cycle right now. It's a stupid lump of metal that doesn't have cash flow or spin off dividend yields. And so I don't want gold and silver. It's just that right now I don't want anything else. They're just in their cycle right now, and they're going to be outperforming everything else, in my opinion, from all of my research. And you're going to be able to buy a whole lot more other stuff, a whole lot more real estate, a whole lot more stocks, a whole lot more oil wells, farmland. All the true wealth is in the buildings, the businesses, the farmland that's out there. And people get this picture in their head that if there's this economic disaster, if there was some sort of collapse, that it's going to be like this nuclear wasteland afterwards. It's not. All the buildings are still going to be there, the apartment buildings. It's just that they're all going to be on sale. The problem is, when investments are on sale, nobody buys. The public comes charging in and they chase investments after they're going up. Gold and silver get hot whenever they're going up, and as soon as we see them take a dip, it's like sales turn off like a light switch most of the time. And I don't want anybody to get slaughtered. I really don't want these bad things to happen. I just think that all the evidence is there that what our leaders have done to the economic system is going to cause these things to happen, and it's inevitable. And I am trying to warn as many people as possible, as quickly as possible. My company has a mission to get as much gold and silver in the hands of the middle class as quickly as possible, because when there is great economic upheaval, there is great political change. It usually goes along with it. In the hyperinflation in Weimar Germany in 1923, this hyperinflation ended on November 15th, 1923. On November 8th, 1 week before the end of the hyperinflation, Hitler's stormtroopers pointed machine guns at the front door of the Burger Braukeller, where there was a political meeting. This is a big beer hall where there were about 3,000 people listening to political speeches. And on that night, he took the stage at gunpoint and to this literally captive audience gave a speech that would change the world. Nobody knew the name Hitler. Nobody knew who he was until he gave this speech to a newly impoverished middle class, people that were scared and looking for somebody to lead them. And here this charismatic guy takes the stage, gives them a scapegoat, and says, I know the way out of this. The next day, those people in that beer hall followed him to try and do a coup to take over the government, and it failed. He was imprisoned. He was tried for high treason. His trial went on for an entire month, and during that month he had the ear of the nation. He was covered in every newspaper all across Germany, and the judges were sympathetic to his beliefs, so they let him go on for hours on end with these speeches. And that's when he gained power. It was when the middle class was scared. The middle class defines a country with their vote. The country, as the middle class goes, so goes the country. And so what I am worried about isn't the loss of my financial well-being. It's the loss of capitalism. It's the loss of our quality of life. It's the loss of our freedom of choice. That's what I'm worried about. And I know that there's certain people that I'm not going to be able to reach. Joe Sixpack, I refer to, the guy that comes out of his beer and football-induced coma at the very end of a bull market and comes charging in and buys at the peak. I can't do anything for him. I'm hoping that I can do something for all of you. These are wealth cycles. If you have two asset classes that are rising, you have, for instance, let's say that this is real estate on the bottom, and on the top here we've got precious metals. Precious metals in this last decade here, precious metals outperformed real estate and stocks, but everything went up. Stocks went up, bonds went up, real estate went up, and so did commodities and precious metals. Is that possible? Can everything go up? Think about it for a minute. You've only got so much stuff in society, and if you've got these three or four asset classes, and everybody rushes toward one, pushing it into a bubble, shouldn't it be drawing currency away from the others? Shouldn't the others be going down? Well, they didn't in the last decade. And what's happening here, if you've got two things that are going up, if you're invested in this one down here, when you go to sell, you can't buy as much of this one. If you're invested in this one, when you sell, you can buy more of this one. They are both rising in price. This one is falling in value. When you sell it, you can't buy as much gold or food or oil. Your house is worth half as much in oil as it was. Oil was $10 a barrel in 1999. So your house measured in oil has crashed. The stock market measured in oil has crashed. If you start looking at your home or all of your investments and you divide them by something else, you measure them in the price of a bushel of wheat, a pound of copper, a ton of iron, shares of the Dow, or ounces of gold, You're going to discover something. These two things that are going up, eventually, the people that are invested in this one realize that the smart investors realize that that's going into a bubble. They sell and they buy the undervalued asset. And then this trend reverses. It can't go on forever. If it did, if gold outperformed real estate forever, there would come a day where 1 ounce of gold would buy the entire planet, and we all know that that can't happen, right? So, eventually one becomes overvalued and the other one becomes undervalued, and the cycle reverses. And then it reverses again. And what is happening is they're printing currency at about this rate, and that's the reason you can't see it. People will say, well, at least my house is worth $100,000 more than it was in the year 2000, or it's worth 20% more. Well, if inflation was 40%, it actually went down in value. They'll say that, they look at the stock market, and the Dow right now is just barely above its 2000 high. It's a lost decade. Stocks have gone sideways for a decade, and we've had inflation during that time. They inflated the currency supply. So, if you start measuring one thing with another thing, so you're measuring stuff against stuff instead of using currency, what you discover is that everything is trapped in this valuation channel, where it goes from overvalued to undervalued to overvalued to undervalued again. And the thing that you're measuring it with is doing the exact opposite mirrored wave. The trick is, sell the overvalued asset near a peak if you can, find the undervalued asset, and I call this wealth cycles. And if you can do that, it's a road to true wealth. You're escaping that valuation channel. So here is a real example. This is the Dow measured in points. And what are points? Points are derived by the dollar value of the underlying stocks. So basically, it's points are dollars. And one of the reasons that they measure it in points is just like if you go to Las Vegas, they take your currency and they give you chips. And now it's just pieces of plastic, so you don't care. You're just having fun.